You're listening to the 10 Bagger Podcast, presented by The Daily Gold. Join us as we uncover tomorrow's 10 baggers today. And now here's your host, Jordan Roy-Byrne.
Hey everybody, welcome back to another episode of the 10 Bagger Podcast. Thank you so much for joining me today. And in this episode, we have returning guest. He is Mariusz Skonieczny. He is the founder, editor, publisher of Microcap Explosions. This is the third time we've had Mariusz on the program, and that's because in the last episode, he mentioned a stock, Voxtur Analytics, which not only is a 10-bagger pick, but it's something that he thinks, or at least from the price then, had 50-bagger potential. I believe it was trading around $1 then, trading around $1.40 today. It's had a big move in the last 2 weeks. And I thought, hey, it's time to get Mariusz back on, chat about recent developments in the stock. And Mariusz, it looks like Voxtur Analytics, the train is leaving the station. What are your thoughts?
Oh yeah, for sure. The last few days, because the major news announcement came on April 6th, which is when Fannie Mae approved the attorney opinion letter as an alternative to title insurance, and then since then the stock has been soaring every day. And I think it's because people are slowly connecting the dots.
Yes, and so I want to quantify how significant that news is first, but before I ask you that question, maybe you can go into the details of why this move is so significant for Voxtur and why it opens up massive potential for new business for the company.
Okay, well, the title insurance industry is a multi-billion-dollar industry, and it's been in place for the last 75 years. So nothing in title changed in 75 years. And the problem with title is that when you buy a property or when you refinance a property in the U.S., you have to get a title insurance. And the title insurance is very expensive. Depending on the state, it could be 1% of the price of the property, or it could be like $1,500. And you see title insurance companies, when they collect premiums, they only pay out about 3% of those premiums in claims, which means this is almost like a scam. They're just literally stealing 97% of the money from the customers. And you might buy a home in 1 year and you pay for a title insurance, and then you refinance it a couple years later and you have to pay for the title insurance again. Like, you paid for it already. So it's an unnecessary cost. And now our government, Fannie Mae and Freddie, they're interested in lowering the transaction costs for real estate transactions. They want to make it more affordable for people to own homes. So Voxtur, about 3 years ago, approached these entities with a solution. Instead of using a title insurance, to use what's called an attorney opinion letter as an alternative to the title insurance. And but this was not possible for it to happen until Fannie Mae approved it as in the guidelines. Because when loans get originated, the originator does not hold those loans on the books. Those mortgages get sold on the secondary market. So in order for the originator to sell a loan on the secondary market, that loan has to meet all the criteria or the guidelines by Fannie Mae. And so until attorney opinion letter was in those guidelines, nobody was going to use attorney opinion letter as an alternative. And on April 6th, that was approved. So now attorney opinion letter can be used, and then that loan can be sold in the secondary market. And it's a game changer. It's an absolute game changer, because attorney opinion letter is a cheaper alternative than title insurance. I mean, think about this. If you're buying a house, expensive house, $500,000, your title might run you $5,000. Well, attorney opinion letter might run you $500. So which one are you going to choose? And also, when rates are coming down, going up right now, the lenders are going to get less transactions. So now they're going to have to fight for business, and now they're going to have to look for ways to differentiate themselves. And attorney opinion letter might be one way for them to differentiate themselves and lower the closing costs to be more attractive. And there is so that's why it's so huge, because Voxtur is the only company that has that product now, the only company, because they're the ones that initiated the product, and they're the only ones that are able to offer it at this point. So they have a mover advantage.
Yeah, just a different question. Why this title insurance scam, as you say, and it really does sound like a scam, why hadn't this been disrupted before? I mean, why did it take some 75 years for it to get to this point? Is it because now we're at a point in the economy where there's so much inflation, housing costs are out of control for most people, and on top of it, the economy is basically been terrible for the average person for the last 15 some years? Is it reached a breaking point, or is it something else?
Well, anytime you have something in place for so many years, the existing parties don't want it to change. So that's one thing. But COVID was the catalyst for a lot of changes in the real estate space. Not on the title side, not just on the title side, but also on the appraisal side, which Voxtur also benefits. When I first looked at Voxtur before COVID in like 2019, I wasn't interested, because I'm like, these parties are never going to change. And then when COVID arrived, I was like, okay, now they're going to change, because they're going to be forced to change. They're going to have to somehow do appraisals without physical inspections and things like that. So once they started looking for alternatives, then they were open to new technologies and new improvements. And that's really what I think, started it.
Okay, very good. Now let's quantify the potential for this business, and at the same time touch on what expectations are for Voxtur this year. I mean, so they did about $100 million or close to that in revenue last year, 2021. And watching your videos and reading some things, it sounds like management is thinking they can double revenue this year, double revenue in 2023, but based on what I've heard you say and other people, it sounds like they're really lowballing. So that $200 million, that $200 million revenue target this year, that's not factoring that much from this AOL, is it?
No, because when they issued that guidance, AOL wasn't approved yet.
Okay, so
AOL standing for Attorney Opinion Letter.
Okay, so quantify for us, if you can. I mean, I know it's difficult. We're just speculating on the future here. But, I mean, how much potential business could this open up for Voxtur this year and also in the next couple of years?
Okay, so the first thing, I'm going to be very conservative. Okay, so number one thing is, I don't know why anybody will be using title insurance. So that's one. So let's say there are about 1.5 million transactions per month, purchase transactions and refis together, about 1.5. But now let's say the interest rates, went up a little bit. So let's just use a number of 1 million transactions per month. And so now, how much of that can AOL steal? I'd say 10% is very, very conservative. Okay, so if Voxtur can get 100,000 transactions per month at $200 of net income per transaction, okay, that's $20 million per month of income. Times 12, that's $240 million per year of bottom line. So now you tell me, how much is $240 million of bottom line worth? What kind of multiple would you put on it? 10, 20, 30?
Well, I mean, I'm less familiar with multiples on these types of companies because we do focus on metals and mining. But for a company that's growing really fast, obviously the macro situation is important. I mean, if this was a year or two ago, I mean, these types of situations were trading at 100 times earnings for that kind of growth. But I mean, if we're going into a bear market and a recession, maybe even and that's just temporary, maybe 20 times.
Okay, so let's use 20 times. 240 times 20 times, okay? That's almost $5 billion. You know what the market cap today is?
Around 700 million.
That's right. And I just gave you a conservative scenario because 10% of market share is only most likely if Voxtur is going to do this business through its own title companies. What Voxtur is more interested in is, yes, they're going to do some business themselves, but they're also going to take this technology and they're going to white label it to other title companies because other title companies don't have this technology, and Voxtur has a patent on AOL combined with the data. In order to make AOL successful, you have to have data, and Voxtur has all the data that they've been acquiring different data companies. So if let's say they go to some of these major title insurance companies, which will want this product because otherwise they're screwed. But let's say they get two title companies, and in total those two title companies will bring 300,000 transactions per month because they already have that kind of transactions. Now instead of making $200 of net income from that, they're going to be making only 100. So that's about $30 million per month. Times 12, that's about 360 million per year. And let's add the 240 million that I gave you before. Now we're talking about 600 million of bottom line. And if we, again, apply the 20 multiple, now we're talking about $12 billion. $12 billion. And that's just in comparison to 700 million market cap. And that's just one business division. We're not talking about the other business divisions that they have. This is just AOL. So do you see why people are starting to connect the dots and are acquiring shares as if there was no tomorrow?
Absolutely. Well, that's why, that's why I, and my subscribers have been acquiring shares, even though we're gold and silver investors, because we, see the opportunity here, as you've explained. I mean, full disclosure, this is not investment advice. Do your own research, hire a qualified advisor, et cetera, et cetera. That's very important to state. But no, I completely understand the opportunity. So I guess so is this product going to be available on all loans, you think, or just to begin with, Fannie and Freddie loans?
Well, all loans below $1 million, purchase price. So pretty much most of the homes. And at first, it's getting rolled out in 4 states, and then it's going to get rolled out to all the states.
What's the timeline on the rollout?
I don't know. They've already been running pilot plans on this. So, it's probably going to start smaller and then it's going to accelerate.
So to get full traction in the market, is that going to take 1 to 2 years or 3 years?
Probably. You should think of 1 to 3 years or something like that.
Okay, well, very good. So, and after this, what is the next immediate catalyst? Is that trading on the NASDAQ?
That's one. There's actually, there's my friend that posted something on Twitter today listing those catalysts. Let me see what it says.
Sure.
So there's about 7 catalysts coming. New clients announcements, AOL attorney opinion letter going live, which is likely within a couple weeks or so. Then you have audited financial statements for Q4 and then Q1. That should be May 2nd and May 28th. And then they're launching also a tax product. And then NASDAQ should be, either this quarter or next quarter. I'm hearing more that it could NASDAQ or New York Stock Exchange listing. That's on the U.S. side, and then uplisting from TSX Venture to TSX TSX, which is the Toronto Stock Exchange.
Yeah, how long?
But I think the biggest catalyst will be the people's realization of what all of this means, because very few people understand the numbers, and every day more and more people are understanding the numbers. I mean, most of the hedge fund managers that I come across, they're just giving me reasons why they're not going to invest in it, because it's too hard. They don't want to take the time to understand it. So if they don't even understand the business, they definitely don't understand what AOL means. But that's slowly changing from day to day. Because, I mean, think about yourself. I just told you with conservative numbers that the AOL alone could be worth $5 to $20 billion. And that thing is trading for 700. I mean, it makes your blood boil. You want to go and buy shares when you hear that.
When I made a note in my newsletter, because I did a flash update talking about this as well as other things last night, that based on your revenue valuation targets, even after the 40% move in 6 days, it was still trading at roughly 7 times trailing revenue. When you in our past interviews and in my notes, you had noted 10 times revenue for a SaaS company is normal, and this is obviously a major growth story that even in a bad market would trade at a higher valuation. So I guess my point from all that is right now it's already easily fairly valued based on what it's done to this point. So this isn't a point where you're buying a year or two ago and you're having to take a chance, wait for some things to develop in the immediate future. It's your risk based on that. Nothing is ever low risk. We know that, but you're buying something that's not. I mean, this isn't trading at 50 times sales and forecasting huge growth. I mean, it's trading at 7 times trailing sales, which is nothing. And if we look at basically their target, the upper end of management's target for this year, that's only 3.5 times revenue, which is nothing.
Yeah, and that, of course, that doesn't include this AOL. So you know that now that guidance is way too low. It was already way too low back then, but now with this, we could be looking at 2022 revenues. It could be 400 million. We don't know.
Right, and so ultimately, you're forgive me if you already mentioned this. So if we're looking out in the next couple of years, I mean, this is something that has potential to be $1 billion revenue business.
Oh, absolutely. I would more likely say $1 billion of bottom line, of EBITDA type of business.
Wow. How much concern do you have about economically the coming recession, going into a bear market with the stock market? I mean, one thing I'll note in another guest that I talked to on my other podcast today, we were just mentioning off mic because I mentioned Voxtur to him, and he pointed out, I mean, the SaaS companies have really already been killed. I mean, they've already had, it's not to say it's over, but they've already been completely killed. They're obviously very sensitive to interest rates. We know that interest rates are going through the roof, but that industry has already been killed. And at some point, interest rates are, I mean, it's, I could be wrong, but at some point they're probably going to go lower and the Fed is going to have to cut rates when things are rolling over. And we may not be, it's not like we're 2 years from that point. We may only be 6 to 9 months from that point.
No, I mean, you're making a good point, but when it comes to the interest rates, right now, higher interest rates are pretty positive for Voxtur, because when interest rates are low and all the banks are getting as much business as they want and they can barely breathe, they're not going to adopt new technology. They don't need to be competitive. But when interest rates go up, then their volume drops and then they have to start getting competitive. That's when they look at new technologies. That's when they look at new products like AOL. So this is very positive. So they can get their foot in the door, and then when interest rates do go down again, and then the activity picks up, then they're already going to have this system in place.
And interest rates going down, that's really not going to change what has happened.
No, once this whole system is in place, when they're using this, they're going to use it whether interest rates are high or low.
Right. No, I completely understand.
And talking about SaaS companies getting killed over the last 6 months or so. I mean, look at Voxtur. Voxtur is going up. Voxtur is up 50% in this kind of environment. Can you imagine how much up it would be if it wasn't such an awful market?
It would probably be a $5 stock already.
Yeah, I mean, I would say that any shares that anybody can get under $5 is a steal.
Yeah, I much more than me, but I happen to agree with you. And so before I let you go, any final words, Mariusz, for our listeners?
Do your due diligence on it. See if this is something that you want to be part of. If you want to, get yourself educated, I have a playlist on my YouTube channel, 11 videos, just introducing people to Voxtur. If you're interested, watch it. Don't just jump in just because I said so. Study it, educate yourself, maybe telephone the management and make up your mind if you want to be part of it.
Absolutely. And I'll just add in again, this is not investment advice. This is for informational and research purposes only, and educational purposes as well. And guys, always have a stop out and an exit point. Not to say the stock is going to go down. I don't think that's going to happen, but you need to have an exit point whenever you're investing. You can't just let something fall and create huge losses, et cetera, et cetera. You have to have a plan, have an exit point, and take Mariusz up on his offer there to follow his YouTube channel and the series there. You can listen to the last interview we did. It's a little longer than this one on my channel. Mariusz, thanks so much for coming on again. And last thing, please tell our listeners where they can go to find out more about your work and Microcap Explosions, and also if they want to contact you, how they can do so.
Yeah, just go to microcapexplosions.com, and then there's my email there, or take my name and put it into YouTube, and you will find my YouTube channel. Okay,
Mariusz, thanks so much for this interview, as well as the past interviews. And I look forward to continuing to follow this story and have you back over the months ahead.
Yeah, thanks for having me.
Thank you for listening to the 10 Bagger Podcast, presented by The Daily Gold. For premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.